Good morning, traders. Good morning, traders. Today is the 5th of November 2016, and we want to discuss Elliott Wave. A trader explains his waves account. Elliott Wave, a trader explains his waves counts. All right. So what I'm going to do here, I'm going to count Elliott Wave. All right. And the talking points are how to count Elliott Wave accurately, how to avoid Elliott Wave count mistakes. All right. And also how to combine Elliott Wave and Fibonacci. All right. How to count Elliott Wave accurately, how to avoid Elliott Wave count mistake, and how to combine Elliott Wave and Fibonacci. But before we continue, you know what we're going to do? I'm going to leave it to traders. You see the two vertical line on my chart from here all the way here. I'm on the monthly chart. And I want you to try to identify the waves. So try to count Elliott Wave, first wave, second wave, third wave, fourth wave, and the fifth wave between the two red vertical lines. As always, I will give you 1 minute. All right. So look at the chart for a while, and then I will start the clock. Okay. So from here all the way up here, see what we will come up with, because usually when we are talking about wave count, there is sometimes a difference between the wave count of one trader in comparison to another. All right, so try to count your wave before I show you how I count my wave. Okay, sometimes there may be difference, but the most important thing is that we do not want to violate the market pattern. So talking about wave count, it is easier to recognize the the third Elliott Wave. All right. So when you see like this, try to see where is the third Elliott Wave, and from there try to find where is the fourth, the second, and the first wave. So it's quite easy to find the third Elliott Wave. Another trick that we can use to quickly identify the third Elliott Wave is you see that most of the momentum indicators you see here, the CCI 30, all right, will be overbought and will stay overbought for a long time. Stochastic will be overbought for a long time, all right, and RSI will be overbought for a long time. So it's quite easy to see the third Elliott Wave. So your time is starting now. 1 minute, my friend. As I'm drinking my tea here, can you see the first wave, the second wave, the third wave? Is quite easy. So if I count my wave and your third wave is different from mine, it means that your wave count is too bad. No, don't be discouraged, all right? It means that you need to work on it, okay? Where is the fourth wave? All right, where is the fifth wave? Remember the alternance between the second and the fourth wave. Do not violate the Elliott Wave principle, all right? Have you finished? You got 17 seconds left. All right, still counting, my friend. It's good for you. Practice wave count. It's very good. Practical wave count. So the knowledge and the practice, all right? So go around, look at many charts, try to count wave, all right? That will help your wave count. Time is up, my friend. So I believe when we compare all the wave counts, we may not see exactly the same thing, all right? But without too much blah, blah, blah from my side, all right, I will show you my wave count, okay? But if your wave count is different from mine, don't be discouraged, all right? Just work on it. So from the two vertical line, okay, all right, this is the first wave. From here to here. That's my wave count, okay? Mine can be different from yours, but don't be discouraged. This is what I call, I'm labeling the first wave. Because in 2009, the stock market has begun a bullish trend. And you can see the financial instrument that we are analyzing today is Broadcom Limited. Broadcom Limited. The EPIC is AVGO, Alpha Victor Golf Oscar. This is a technology stock listed on the Nasdaq 100, okay? So this is my first wave. So I will color it into green, beautiful green color. All right. So my second wave is quite shallow here, quite simple. You see here, just down like this. This is my second wave. Are we having agreement here? All right. Then my third Elliott wave has been subdivided into 5 minor waves. This is the first minor wave of the third wave. It's not easy, isn't it? All right, it's not easy. It's the second minor wave of the third wave. And boom, here it is, the third minor wave of the third Elliott wave itself. You remember last time we count wave here? All right, remember the last video that we posted? It was similar situation, all right, talking about how to combine Elliott wave and Fibonacci, okay? And followed by the 5th minor wave of the third Elliott wave. So our third Elliott wave, let's move this line away. Our third Elliott wave is from here all the way up here. Do you agree? Now, so remember, you can disagree with my wave count. Okay, you have the right to disagree with my wave count. So because you do not want to trust anybody, all right, trust yourself. Work on your ability to work. So first wave, second wave, third wave, which has been subdivided into 5 minor waves without violating the Elliott wave principle. Are we in agreement? Now the fourth wave has been, it's a complex fourth wave. In fact, we can say all the way here, but I'll put it like this now. I would prefer to put it like this. I'll leave it like this. I have a reason to put it like this today. But it's like this. The fourth wave, I'll put it like this for now. Right? But it's 1, 2, 3. All right. It's also a complex, all right, fourth wave. You see that is. Boom. And boom. All right. So 1, 2, 3. That's the fourth wave. Okay. As always, I color into pink. Here we are. That's the fourth wave. Are we getting there? All right. Don't smash your computer because you think my wave count is hopeless. All right. Okay. Now, so that's the fourth wave. My fourth wave. All right. And followed by the fifth wave that is ending here. So far, will the fifth wave be extended? At this point in time, with the information that I have, that you remember what I said to you, that's how you want to, that's the mindset that you want to have, okay? With the information that we have today, all right, this is my first wave, this is my second wave, this is my third Elliott wave that has been subdivided into 5 minor waves, and this is the fourth wave, which is a complex fourth wave, 1, 2, 3, followed by the fifth wave. If you have done exactly the same thing, well, good. If yours is a little bit different, you want to make sure that you are not violating the market pattern. All right. Okay. So this is it. But one more thing. You see now, with the information that I have, you see my chart now, I cannot see, okay, the beginning of the 2009, okay? This is something that's bothering me a bit. But that's all I can see on my monthly chart now. And with that, this is what I can see. All right. So this is my wave count. So how to count Elliott wave accurately? Remember, we say I'm not going to go deeply into this now because we say that we must use different time frames. So you can't wave on a monthly chart. You want to validate your wave count, you must use a higher time frame like the yearly chart to see whether everything is adding up together. We can also go a little bit deeper by looking at internal wave. See here, 1, 2, 3. All right. So looks to me, all right. This move is just one move up. You see, it just went up, boom, 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 up. All right, it's not bad. It's an impulsive move on the yearly chart that is forming, all right, that is subdivided into 5 minor waves on the monthly chart. All right. See, just a pew. Good. This move from here all the way up here on the yearly chart is subdivided into, is subdivided into, okay, 5 minor wave on the monthly chart. Okay. Now let's go back to our chart on the monthly chart. Another thing to avoid Elliott Wave count mistake, always try to go into the mind of other traders. So, like now I'm saying to you, this is my wave count. How other traders may count their wave. You want to know, all right? You need to know, all right? You need to know, all right? You need to know what's going on. Other traders may think that the fifth wave, the multi-wave, so they will say 1, 2, 3, 4, 5, all right? They will say that, they will say first wave, all right? Probably they will say first wave, and then they will say, some traders may say this is the first wave, some traders may say second wave, all the way here. They will say, George, are you blind? 1, 2, 3. All right, they will say this is the second wave, okay? And then they will say this is the third wave up to this point. So first wave from here to here, second wave, complex second wave, okay? And then they will say third wave, fourth wave. So they will say fourth wave and a fifth wave. George, what is you are talking about here is a correction that's begun. We have a flat correction, a double retracement. Are you getting it now? So they will say first wave, second wave, third wave, fourth wave, fifth wave. All right? And they will say this is a double retracement and we are having a flat correction and the price may go down. So this will help you to avoid, okay, Elliott Wave mistake. Never count Elliott Wave and think that my wave count is the best and I cannot be wrong. All right, you understand? So always try to think what other traders may see, how other traders may count their wave. So by doing that exercise, you are comparing your wave count with others. So suppose you were here, we see 1, 2, 3, 4, 5 down. So we will say, well, so those people were correct. So 1, 2, so it's a flat correction. 1, 2, 3, 4, 5 down. So we know, okay? So, but with the information that I have, personally, I'll stick to my wave count. But even though there is a bit of difference between my wave count and what I've just said to you, you can see that anytime the price is, they're expecting the price to go down, I'm also expecting the price to go down, you see here. So they call it this third wave. It's part of my complex third wave. They call this the fourth wave. I'm expecting it to go down here, and they're expecting it to end here. And they're expecting it, because they are calling a flat correction, they want a double retracement, 1, 2, 3, you see, up here. Expecting the price to end, so they will apply here, those traders, they will apply Fibonacci. So did I say that we will apply how to combine Elliott Wave and Fibonacci? So those traders will apply, so their fifth wave, those traders, their fifth wave is this one here. You remember? My fifth wave is this one here. So those traders will have applied Fibonacci extension to this fifth wave, and they will be watching the 138.2% Fibonacci extension level of that fifth wave. You see here, it went above it. This is helping me. Now that I see that, I'm thinking that probably my wave count is better. But those traders that are counting Elliott Wave, the multi that are labeling this one the fifth wave, though their wave count is different from mine, they will make profitable trading decision, yes or no? They will, because the bottom line is not to lose, and the first rule is not to lose. Okay, first rule, do not lose. All right, it's not about applying the Elliott Wave correctly. It's about do not lose. All right. The second rule is what? Do not forget the first rule. All right. So now their 138.2% Fibonacci extension is ending here. I'm thinking, well, if they call they call this one fifth wave, then they are calling this a flat correction, which is not. In fact, normally the flat correction is 1, 2, 3, 1, 2, 3. All right, and then we have 1, 2, 3, 5, 1, 3, 4, 4, 1, 2, 3, 4, 5 down. All right, you remember the internal wave of the flat correction? 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. All right, so if you don't know about the flat correction, it means that you need to go to 2-4 Elliott Wave and watch all the videos about the flat correction. So normally their flat correction should end somewhere near the 138.2% Fibonacci extension level of their fifth wave, but it went a little bit above it, so I'll stick to my wave count. Okay, so now we apply Fibonacci extension to verify how other traders may count their wave. Oops, I moved my fifth wave. It's not finished yet. All right, stay tuned, my friend. It's not finished yet. Don't run away. I told you how you can consume YouTube video bit by bit. If you don't have time, all right, come back again and take it from where you left it. Okay. All right. Now, next thing, I'm going to use now Elliott Wave channeling, all right, to see whether, for instance, if you were here and we were trying to forecast the end of the fourth wave, all right, you know how we use the Elliott Wave channeling? No? Well, start watching our most recent videos and you'll see a video about Elliott Wave channeling, okay? So, in order to forecast, so if you were here trying to forecast the fourth wave, we will have highlight, we will have joined the high of the first wave and the high of the third wave. I'm going to use my wave count. So this is the high of my first wave, this is the high of my third wave. This is how we forecast. That's the first line that we draw if we want to forecast, if we want to forecast the fourth wave. Let's see whether, if we apply, you know what we are doing? We are doing a verification, all right, to see whether are we completely wrong or not. All right, this will help us a bit. So this is the line that I draw. Okay, I'm going to color it now in red. Okay, that's a red line connecting the high of the first wave and the high of the third wave. What's the next step, my friend? Do you remember? We will select the low of the second wave and we draw a line that is parallel. So if I call this the low of my second wave, see now? So talking about practical Elliott Wave trading, you will see something now that will be very interesting to you. So that I draw a line to the low of the second wave that is parallel to the first red line. I'm going to color my second line also into red. And there is something that is going to get your attention now. You can see that my fourth wave went a little bit below here, you see. In fact, I will say to you that the second red line that I have drawn now is not useful to me. Why? Because you can see that the third Elliott Wave is below, almost below that red line. Normally, in a normal Elliott Wave channeling, when we connect the high of the first wave and the high of the third wave, and then we draw another line to the low of the end of to the low of the second wave that is parallel to the first line, as I did here. This second line, okay, should support the third Elliott Wave. The third Elliott Wave should be above that line. Most of the time, 70% of the third Elliott Wave should be above the second red line. But look, it's stuck below it. So personally, this is what we are talking about, the reality of the market, all right? So personally, this second line is not useful to me. The reason why it's not useful to me is the way, you see, we have a complex third Elliott Wave and the price again pulled back a bit. Here too much, okay? This one here. Price went almost horizontal here. Can you see that? There was a little bit of consolidation. It looks like a little bit of consolidation here. This is why that second line, it was not useful to me. Are you getting it? You see, yeah, it's quite, the second line is not useful to me. Therefore, I will, when I'm trading and I see this like this, I'll move it here, because I use this one It was not useful to me. Now I'll select this point and I'll draw a line that is parallel to, okay, my the first line. Okay, so let's see whether it's parallel, totally parallel. Let's see, because I'm drawing roughly here. Are you getting the message, my friend? Yes, almost parallel. So now that I put it here, or this low here, the low of the second minor wave of the third wave, you can see that it's making more sense. You see here, the prime push it down. You see, they prefer the professional. You see the can you see? Let's move those lines away. Right, can you see? They push it down near this red line. This is a more useful trend line. And one more time they tried to push it down, but it couldn't touch it. That's why I can say that I'm happy with my wave count here. I'll prefer my wave count, calling this a complex fourth wave. So we try to retest that red line. When now try to retest, now it displays high low. We are now in the fifth Elliott wave. But as always, all right, you do not have to accept my wave count. Always question my wave count, my friend, all right, and compare your wave count with my wave count, all right. Don't, because there's sometimes trader believe another trader, all right. I know what I'm talking about because I've done the same thing myself. See, that trader knows everything about it. I must believe him like God. No, don't believe anyone like God, okay? Just improve your wave count and always, okay, try to validate your wave count. Try to see how other traders may count their wave. See whether your wave count, okay, is violating any Elliott wave principle. So what I'm doing here, by using the Elliott wave channeling, I'm trying to verify a little bit whether is everything adding. Now, it does not have to add up perfectly, all right? Sometimes you may see that it may not add up as it did here. And with those verifications, it will be useful. I will say, all right, okay, I'm happy, okay? You want to accept your own wave count by verifying whether you have missed something or not. Is there anything else to look at? Is there anything to change? So we have the preliminary wave count. So now this is why we are doing the verification to see whether can we trust our own wave count, okay? I have not finished yet. We're going to talk about Fibonacci pattern that is also here. So one more thing. For the verification of my wave count, so using Elliott wave channeling to forecast the fourth wave is making sense. Do you agree? Let's see, talking about the forecast of the fifth wave. If we want to forecast the fifth wave, how do we do it? We will draw, hold on please traders, I'll move this line away. We will draw a line connecting, okay? You see, this low here is not useful to me. The low of the second wave. Normally, we'll connect the low of the second wave and the low of the fourth wave, and we'll draw the first line. Remember here that this low is not useful to me, therefore I'll use this one again. I'm not going to do it and then change it again. So connecting this point, normally it should be the low of the second wave and the low of the fourth wave. That's the first line. And then we draw another line that is connecting, that is passing. Let me drink my tea to clear my voice. Then we will draw another line through the high of the third wave. So we connect the low of the second wave and the low of the fourth wave. We draw the first line, and then we draw a line that is parallel through the high of the third wave that is parallel to the first line. Here it is. And with that line, we will try to forecast the fifth Elliott wave. The parallel, almost parallel, okay? So you can see that one more time, by doing this verification, I'm almost in tune with traders that were trading Broadcom Limited, okay? All right, so you see here the fifth wave almost there. If they're going to push the fifth wave more, watch out for this channel here. So those who were using Elliott Wave channeling were counting the wave almost like I did here, and they are channeling. They did not put it at this low here, but they put it here. See here? All right, end of the fifth wave. All right. So this is about Elliott Wave trader explain his wave count, but we have not finished yet. All right. So I'm going to remove the lines, and we're going to talk about Fibonacci pattern, which we did last time, because a trader has asked, okay, to record more video about how to combine Elliott Wave and Fibonacci. Remember our talking point, how to count Elliott Wave accurately, how to avoid Elliott Wave count mistakes, all right? And now how to combine Elliott Wave and Fibonacci. I've done one first time when I was talking about the flat correction, that those who were counting the wave differently who have applied the Fibonacci extension to their fifth wave. One more time here, without too much blah 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 from my side, all right? We have here what we call a butterfly pattern, right? So this session here, you can see that there was a bullish move, a trending first, and then we have a pullback. Okay, so that pullback, that's what we call XA. Now, then we are waiting for the AB move. The AB wave should retrace the SA up to 78% Fibonacci retracement level. It almost went to 100%. Here it is. It's quite deep retracement. So when you see that any retracement after the SA, you went to 70% or just a little bit above, the first Fibonacci pattern that should come into your mind is the butterfly pattern. And then we are expecting the BC, which can be between 38.2% and 88.6% Fibonacci retracement level of the AB. This is correct here. So our verification continue. Now the C to D, the C to D should be between the 127% and 161.8% Fibonacci extension level of the SA. So let's apply Fibonacci extension to this SA. So this is our SA, talking about the butterfly Fibonacci pattern and the A, B, C, D chart pattern. We will expect the C to D to end in a zone of 1 to 7% up to 161.8% Fibonacci extension level of the SA. Let's do it accurately without cheating. All right. Okay. Going to remove the pink line. So yeah, in that zone. Okay. So where is the 161.8%? Here it is. That's the line you see here. You see is this line here. That's the one. Can you see 161.8% on my chart? Or am I talking to myself? 161.8%. Here it is. The level for 18329. Our butterfly Fibonacci pattern is completed here. All right. We may see a bit of pullback. A bit of pullback. We will see at least minimum pullback. So, because this is a technology stock, remember, my friend, anytime you are trading in technology stock, especially stock that are listed on the Nasdaq 100, you want to pay attention to Google stock and Apple stock that are the market leaders for the Nasdaq 100. Very important. All right, so you want to align your strategy with those stocks. If they are bullish, pay attention to your bullish watch list. If they are bearish, pay attention to your bearish watch list. All right, Do not fight the market leaders. All right. So here, Fibonacci traders will be expecting this stock to pull back a bit. Elliott Wave traders that have counted their wave, like myself, will be expecting a correction to begin here. But remember, the correction sometimes, as we have seen in 2006, can drag its feet for different reasons. Because the market is typically bullish. People don't like to sell. And most of market participants hate to a bearish market. All right. So when a bearish move is due, there is all sort of thing going on to stop it. All right. But until people understand that price going down is also healthy sometimes, you see here, the price has to go down before this strong move up. Right? Very important. The price has to come down here before this move up. But sometimes when we are talking about correction, people say, George, stop it. All right? George, keep your mouth shut. All right? But it's just what's going on. We have different seasons. And for this stock, but as I explained it to you now, whenever you counted fifth wave, the mistake that a lot of Elliott Wave traders are making, they will say, definitely it's going to come down and I must sell. No, you will apply a top-down trading method to trade it. If the signal fails, you come out. Because sometimes the price will do all sorts of things before you will see it coming down. All right? So this channel here, the line that I drew before, connecting this point and this one. All right. We will prefer a minimum move to retest it at least, and a bearish move will truly be true if the price finds a resistance below this red line here. All right. This is the end of this tutorial, my friend. If you have any questions, suggestion, or comment, put in the comment section. And in due course, I will be recording another video to answer your specific question. We are the GSTWSYS008 traders talking about Elliott Wave trader explains his waves count. Happy trading to you all, and speak to you soon.